This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Venezuela and the U.S. have progressed in talks that could provide sanctions relief to Caracas by allowing at least one additional foreign oil firm to take Venezuelan crude oil for debt repayment if President Nicolas Maduro resumes negotiations with the opposition in Mexico, 5 sources said. Envoys from Caracas and Washington have held several meetings in Doha since last year in a renewed effort to solve a long-running political and economic crisis in Venezuela, including discussions on a presidential election. Separate talks between Maduro's envoys and the Venezuelan opposition are expected to follow in Mexico in the coming weeks, according to sources.
Oil prices eased on Tuesday after rallying more than 4% in the previous session, with traders cautious as they watched for potential supply disruptions amid military clashes between Israel and the Palestinian Islamist group Hamas. Brent crude fell 36 cents to $87.79 a barrel by 08:05 GMT, while US West Texas Intermediate, WTI, crude eased 35 cents to $86.03 a barrel. Both benchmarks had fallen by more than $1 in earlier trading before recovering slightly. Brent and WTI had surged more than $3.50 on Monday as the clashes raised fears that the conflict could spread beyond Gaza into the oil-rich region.
Moving on to the top news in the energy sector.
Dutch and British wholesale gas prices rose on Tuesday morning on concerns over supply prompted by violence in the Middle East and on colder weather forecasts. The Dutch November contract was up by €3.00 to €46.00 per megawatt-hour, MWH, by 08:52 GMT, while the December contract was €1.35 higher at €48.15 per megawatt-hour. The British day-ahead contract rose by 8.00 pence, hitting a 9-day intraday high at 103.00 pence per therm. The November contract was up 6.30 pence at 113.00 p therm.
OPEC raised its world oil demand forecasts for the medium and long term in an annual outlook, and said $14 trillion of investment is needed to meet this demand even as renewable fuel use grows and more electric cars take to the road. The view from the OPEC, in its 2023 World Oil Outlook released on Monday, contrasts with that of other forecasters, including the International Energy Agency, IEA, that say demand might peak this decade. Another decade or more of rising consumption would be a boost for OPEC, whose 13 members depend on oil income. The group says oil should be part of the energy transition, and it cited decisions by some governments and companies to slow their retreat from fossil fuels. Next, we have the top news in metal markets. The global coal industry may have to shed nearly 1 million jobs by 2050, even without any further pledges to phase out fossil fuels, with China and India facing the biggest losses, research showed on Tuesday. Hundreds of labor-intensive mines are expected to close in the coming decades as they reach the end of their lifespans and countries replace coal with cleaner low-carbon energy sources. But most of the mines likely to shut down have no planning underway to extend the life of those operations or to manage a transition to a post-coal economy, US-based think tank Global Energy Monitor, GEM, warned.
Prices of most non-ferrous metals declined on Tuesday, weighed down by a somber economic growth outlook and concerns about the Chinese property sector. 3-month copper on the London Metal Exchange, LME, fell 1.1% to $8,016.50 per metric ton by 07:34 GMT. The most traded November copper contract on the Shanghai Futures Exchange shed 1.3% to 66,460 yuan, $9,110.72 per ton. Chinese have been buying the dip after a long holiday break, but were hit with the reality of slowing macroeconomic growth that is likely to decelerate further, said Sandeep Daga, a director at Metal Intelligence Center.
We will now look at the top news in the agricultural sector.
Russian wheat export prices declined last week amid reduced demand from major importers and continuing unofficial restrictions on the minimum selling price, while analysts see a drop in supply volumes. The price of 12.5% protein Russian wheat scheduled for free on board FOB delivery in early November was $230 per metric ton last week, down $5 on a week before, the IKAR Agriculture Consultancy reported. The Sovcon Agriculture Consultancy sees the price for this class of wheat at $238.242 per ton FOB, down $1 on a week before. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.